Hey guys, welcome back to Sky Talks Trading. Today I'm just hopping on here to give some bite-sized info, news about Tesla. ARK Investment Management, which is of course led by Cathie Woods, bought 49,755 shares, which is worth about a whopping $34.55 million. So that happened on Wednesday as the stock dipped after the reported earnings for the first quarter. Tesla holds the highest position in ARK among a total of 58 stocks and contributed about 9.67% of the weight of the EFT, valued at about $2.38 billion ahead of Tuesday's trade. It's no shock, it's no surprise that Wood has been very bullish on Tesla, but in the last month, she sold some shares of the company as it looked to rebalance its portfolio and actually loaded up on Coinbase stock. Other ARK buys on Wednesday were CM Life Sciences Inc., Zygerman Inc., Recursion Pharmaceuticals, 908 Devices, Ionis Pharmaceuticals, Spotify, Shopify, Iridium Communications, Jaws Spitfire Acquisition, Galileo Acquisition Corp, JD.com, Pinterest. So it looks like that cascade of pessimism that was really hurting Tesla in the recent days may be starting to fall away. Tesla were, headed towards a fourth consecutive daily decline when suddenly the shares made a U-turn, and, that happened around midday trading Friday. And there's two factors, both related to 2021 performance, that might be making investors more positive heading into May. Tesla stock started out the week at about $729 and closed Monday at $738.20. Ahead of the company's first quarter earnings report that afternoon, earnings were higher than Wall Street expected, which is always good, but questions about the quality of the reported earnings, that is, the degree to which trading in Bitcoin and sales of regulatory credits for producing zero-emission cars lifted the number, sent the stock lower. And there was still some concern over a recent crash of a Tesla vehicle in Texas, which was affecting the price negatively as well. The stock price bounce may just be a relief rally, marking the end of the post-earnings selling spree, but two bits of news that were both announced using Twitter appear to be at work as well. This is from a New Street research analyst, Pierre Ferrago. He tweeted out on Thursday that ST Microelectronics believes its revenues from sales and silicon carbide will hit $550 million in 2021. The company said as much on its April 29 earnings conference call when CEO Jean-Marc Cheryl talked about capacity expansion. So why does this matter? Well, it matters because, according to Pierre, ST Micro is Tesla's sole supplier of silicon carbide. Also, he says Tesla accounts for 80% of the company's silicon carbide sales, and that sales of $550 million imply Tesla would produce as many as 1 million vehicles. Wall Street is looking for 800,000 Tesla deliveries in 2021, and so 1 million vehicles would be a huge surprise, a very welcomed surprise. And then we have Gary Black, an influential market watcher. He also tweeted out something he uncovered in Tesla's recent 10Q quarterly filing with the Securities and Exchange Commissions. He said, retweeting, "This didn't get much attention yesterday, but I think it's important. From Tesla Q10, 2018 CEO award showed as probable CEO milestone of $55 billion revenue and recognized $116 million of CEO SBC expense, even with the 1Q revs of just $10.4 billion. So this is why, if you're serious about investing and the stock market, etc., you could definitely benefit from being on Twitter, active in the space, because that's where a lot of the important influential analysts and former Wall Street analysts, just like Gary Black. That's where they be hanging out and saying stuff. So that's all for today, guys. Until next time, bye-bye.